Hello clients and friends, this is Dennis Goodman and it's my pleasure to present our third quarter economic and market update. Today's agenda is pretty simple. After sharing a brief economic and market update, we'll follow that with some proactive guidance moving forward. We always like to remind you that there are 5 key areas of financial planning. There are preservation planning, retirement planning, tax planning, estate planning, and investment planning. While we try to always consider the impact of any recommendation we make on not just one but all of these areas for our clients, today's presentation will primarily be focused on investment planning and equity markets. At our firm, we partner with clients and believe an educated client is our best client. And while we always try to do our best to help you, when it comes to your finances, we believe that knowledge is power. And one of our missions has always been to share with clients any knowledge that can help them make an informed decision. The month of September can be troubled, as it ranks as the weakest month for equities over the last 20 years. History once again repeated itself this year as investors saw a difficult September for both the S&P 500 and the Dow Jones Industrial Average. When the third quarter started, with strong earnings reports that lifted many U.S. large stocks during the summer, it then ended with the Federal Reserve striking a dovish tone, confirming its hesitance to tighten policy too fast. During the third quarter, in the month of September, the S&P 500 experienced its worst monthly performance since March of 2020 in the early days of the pandemic. It closed the quarter at 4307 after dropping 4.8% in December. But even with the drop, it still experienced its 6th consecutive quarter gain, up a modest 0.2%, and it is still up for 2021. The Dow Jones Industrial Average ended the third quarter lower than it started, finishing at 33,843 after dropping 4.3% in September. For the third quarter, it ended up down almost 2%, marking the first quarterly loss for the Dow Jones since, you guessed it, the first quarter of 2020. The Dow is also still positive for 2021. A combination of factors continue to influence the direction of equity markets. Some major concerns currently are rising inflation expectations, impending interest rate changes, monetary policy changes, including the myriad of tax law proposals, and continued COVID-19 concerns. All of these items could continue to be major factors in determining the future direction of the economy. These themes could potentially cause market volatility for investors in the near future. The Federal Reserve's committee met in September, and during this meeting, they announced that the Fed's fund rate will remain 0 to 0.25%, and they expect to keep this range until labor market conditions improve. They shared on their website that the committee's assessment of inflation has risen to a sustainable 2% and is on track to moderately exceed 2% for some time. Fed Chairperson Jerome Powell suggested that tapering, or the reduction in the purchasing of bonds, could begin as early as November and conclude around the middle of next year, and that could cause interest rates to rise. Inflation is a real concern for savers because it eats into purchasing power and lifestyle. It's always a good idea for investors to try at least keep pace or exceed inflation rates. We're keeping an eye on inflation and interest rates and any changes that may affect our clients. The 10-year Treasury Yield finished out the quarter at 1.52%, and this is a slight rise from the beginning of this year when it opened at 0.93. In March of this year, we saw some Treasury yield highs for 2021, when the 30-year yield reached 2.45% and the 10-year hit 1.74. But by the end of the third quarter, we saw these slightly lower as the 30-year ended at 2.08 and, as we said before, the 10-year at 1.52. With a 2% long-term inflation rate expected, a resurgence of higher yields like we saw in March could be a possibility. Now, all this safety comes with a cost. Of course, have you seen interest rates that banks are currently offering to savers? According to Barron's Magazine, The average bank money market rate on October 4th nationally was 0.07%, and the average 12-month CD rate was a whopping 0.15%. At a rate of 0.15, without accounting for taxes, it would take over 350 years to double your money. And for many investors, today's ultra-low rates might not help them reach their goals. Therefore, equities could be a part of your diversified portfolio. As this chart shows, since 1950, the fourth quarter of the year has empirically been the best quarter for equity markets. However, investors need to remember that prior performance never indicates future performance, and there's still many key factors that could affect what direction we see equity markets move in the fourth quarter. Overall, 2021 has been a positive year for equity investors, and historically, a positive first half of the year traditionally has brought a positive second half. Once again, historical results are no indication of future results, and we still believe that caution should be the principal notion for investors. Being cautious is natural, it's healthy, it's smart. Investors should seek to become aware of their behavior in times of volatility as well as in opportunistic times. Being too fearful or overly optimistic can many times lead to rash or poor decisions. Your emotions can make you a reactive instead of a proactive investor. Knowing your investing behavior and how to effectively control it is an important tool to help you navigate not only volatile times, but it also can assist you in avoiding impulse investing on too good to be true opportunities. A key to becoming successful at your goals is staying focused on your personal situation. There are 4 major things you should have a grasp of that can help you maintain discipline and direction towards your goal. These 4 things are: 1, your risk tolerance or appetite. By this, I mean how much risk are you willing to take, or better yet, how much can you afford to take? Number 2, your time horizon, or the amount of time you want to be invested in any situation, which can help you determine your entry and exit points. Number 3, your behavior. Market volatility is part of the investing experience. This can create anxiety and stress when volatility occurs. Do you know how well you can emotionally endure the potential ups and downs of your investments? And number 4, your overall strategy. Are you looking at something that doesn't quite fit with your overall strategy? Perhaps the media is influencing you to make a rash decision on a trending investment. If it isn't congruent with your overall strategy, the odds are there's more risk involved. Pressure can create more risk and potentially cause setbacks in your goals. New opportunities may arise, but not all will be the right opportunity for your overall strategy. Having predetermined entry and exit points can be a helpful investing strategy. And the major factors that will help you determine your overall approach will be your risk tolerance, your time horizon, and your investing behavior. Here are the key items we hope you take away from our brief review. Caution is still the principal notion for investors. Interest rates are still near zero, but they may rise sooner than expected. Inflation continues to be a concern, and the Fed has suggested that tapering may occur as soon as November. Having a predetermined entry and exit strategy can help you save time, money, and help you reduce risk and stress. And always, we're here to help you. One of our main focuses is to review changes for our clients on an ongoing basis. We do this with regular communication, more frequent discussions, and we're continuously reviewing economic, tax, estate, and investment issues for our clients. We appreciate our clients. As a client benefit, you can add names to our mailing list for viewing this workshop. We hope you'll take advantage of this and add 2 names or more to our list. One of our goals is to continue to help others. Some of our best clients were referred to us by existing clients, So please feel comfortable letting us know the names of anyone you feel could benefit from our services or information. Again, one of our primary goals is to keep clients informed, and we appreciate you taking the time to watch this workshop. Please call us if you have any questions.